All right, so in this video, I'm going to break down the A plus Midas model trade that me and my members took on Friday, basically. And I'm going to break down the entire trade for you. But before I do that, I want to teach you the Midas model. The previous video was on it as well, but I'm going to go over it once more so you guys can understand it correctly. And once we have understood the strategy, I'm going to break down the trades that we took so you guys can understand everything correctly and you can basically use this on your own, right? So as you can see, we took the members in the Discord took it, and I took it as well. Now, what is exactly the strategy? So we are only going to be trading gold, right? And make sure you have your time zone set to New York. That's the timing that we are going to be using. Now, the very first step of the strategy is we want to go on to the 15-minute time frame, okay? That is step one. Now, before 8 p.m. New York time, before 8 p.m. New York time, you want to mark out the most recent low and most recent high, okay, before 8 p.m. So we have this high and we have this low over here. Now, what you want to do is you want to mark them out, okay? Once you have marked them out, what you're doing is after 8 p.m. New York open, okay? So as soon as the clock hits the 8 p.m. New York time, you are waiting for price to either sweep out the most recent low that we marked out on the 15-minute or the most recent high that we marked out on the 15-minute. So let's assume that price goes down and takes out the most recent low. Now from here onwards, what you want to do is you want to drop down to 1 minute time frame over here. Now, once you drop down to 1 minute time frame, you are simply looking for a market structure shift. Now, once we have a 1 minute market structure shift, the next step is very simple. All you got to do is you can take your entry from any PD array. So this could be a breaker block, or this could be a fair value gap. Okay, so you can take your entry from a fair value gap or a breaker block. Now, all you're simply doing is taking your entry from the fair value gap or the breaker block or an auto block, and then you are going for 1 to 2, or you're targeting the opposite side liquidity. Similarly, what you would do is mark out the most recent high and the most recent low on the 15-minute time frame, and then when the market opens, the Asian session starts at 8 p.m. As soon as the clock hits 8 p.m., you're waiting for price to either sweep at the high or low. So in this case, the high was swept first. Then we drop down to 1 minute time frame, and then we look for a market structure shift. We take our entry from the fair value gap and we target the opposite side liquidity, or we go for 1 to 2 risk reward ratio. Now that is trade number one. Now you can take another trade, and this is how it goes. So we first utilize the 8 p.m. open. Now you want to do the same exact step, okay? So let me just do that. Okay, so now what we want to do is we want to mark out the most recent high and most recent low before 9 p.m. open. So just after 1 hour, okay, before 9 p.m. open, we want to mark out the most recent low and the most recent high on the 15-minute time frame. Now you can take the second trade as long as you are done with the first trade that we took after the 8 p.m. open, okay? Now you can take 2 trades, or you will not get a setup after 8 p.m., but you will get a setup after 9 p.m. open. Okay, it all comes down to time and price. The algorithm operates on time and price. Now before 9 p.m., we have marked out the most recent high and the low. So then as soon as clock hits 9 p.m., you are waiting for price to either sweep out the high or the low that we marked out. So let's say that the most recent high that we marked out is taken out. Now the next step is that we are waiting for 1 minute market structure shift. So that is the 1 minute market structure shift that happens like that. You take your entry and you target the opposite side liquidity, and this would obviously look the same when you invert the chart. So this would be a long position after 9. Now what you want to do is your entry must be before the 12 p.m. okay, 12 a.m. my bad. Okay, so it should be before. Okay, it should be before that, before 12 a.m. If your entry is after that, then the algorithm is not going to be in your favor and it's not going to work out. So make sure your entries are before that, okay? And pretty much this is the simplest model that I have. And yeah, I'm gonna break down the trades for you guys that we took on Friday, so you guys can understand it correctly. All right, everybody. So here is the trade breakdown. So as you can see, I'm right here at 7:59 p.m. right? And what we want to do is mark out the most recent low and the most recent high. So we have the high and the low. Now, do note that we can only utilize the highs and lows that are formed after the previous day's New York session. So that is after 12, okay? So any high and low after 12 is utilizable, okay? You can utilize that. So what we can see is that we have the high and the low. Now, what we did is we went down to 1 minute time frame, right? You can see 7:59, and as soon as the clock hits 8, now we're waiting for liquidity sweep, and we have the liquidity sweep, okay? Now the next step is that we kind of entered after the inversion. So we had these two fair value gaps here, right? And this candle was going to be your entry. Stop would have gone above the inversion, okay? So from this dealing range low to this dealing range high, we had two fair value gaps. And once they get inversed, then you can take your entry as well. Now, we simply went for 1 to 2. So let me just mark that out like that. And you can see that price pushes down and the TP was hit. Now, that was the first trade, okay? Now, let me go back to the 15-minute time frame once again. So we have it here, and that is 8:30, 8:45. And now you can see that right after this happens, what you can see is this is the 9 p.m. open, right? This is where the 9 p.m. opened. We had this high over here. Now what you're going to see is after 9 p.m. All right. This is the open. We have the liquidity, and after 9 p.m. we have a sweep, right? Right here we sweep, and then we have a market structure shift, and you could have taken your entry right here as well. This would have been a very nice inversion. This could have been a aggressive entry, but you could have waited for these fair value gaps to get inversed as well. And let's say that this was your entry right here. Stop would have went above the inversion, and you could have targeted 1 to 2 or 1 to 3. And you can see how this played out. Absolutely beautiful. So yeah, that was the trade we took, and I promise you it works like 80-90% of the time. And yeah, this sounds like ridiculous, but we trade this every day in the Discord server. You can see that we had this set up the previous day as well. So this is 7:59, right? And then we have the low. Sorry, we have the low before the 8 p.m. open, and we have the high, right? Now notice how we didn't engineer a high. There wasn't a high close here. Apologies. We only had a high over here. Now, what we were waiting is for price to either take out this high or this low. But this low was taken, and not after 8, but after the 9. So the 9 p.m. Midas model gave you the trade, okay? So you can see we swept this low exactly after the 9 p.m. open. So we opened here, we pushed down, and let me go back here, okay? Let me show you how beautiful this trade was. So if I go on to the 1 minute time from here, let me just go back here, right? We swept the low, we pushed down once again, and if you can see here, we had this fractal market structure shift, and then we also had this market structure giving us more confluence. Now, you could have taken your entry from this fair value gap, or you could have just utilized the breaker block. So over here, you can see we had a breaker. We wicked below it, but bodies tell the story, okay? So we failed to close below the breaker, and then we had a very sharp push to the upside. So let's assume, with the benefit of hindsight, that if you took this trade from this fair value gap, and let's say that you lost 3 trades in a row, and then you only took this trade, right? And you were targeting this high over here. Imagine, bro, you would have like gained 11 RRs. So even if you lost 3 or 4 trades, or let's say even 5 trades in a row, you would end up at like 7% profit, which is absolutely crazy. This strategy, what I'm teaching you right now, no one teaches that for absolutely free, but I'm doing it. All right. If you're interested and you want to see me give out signals for this strategy and also live trade NQ every single day, then there's a Discord server and a full course that's going to teach you everything about ICT. I don't really usually talk about the course and stuff, but I promise you I'm talking because it's going to benefit you. Okay, so there's a link down in the description. If you're interested, join the community and we trade every day live, and also I send out these signals. So yeah, that was the video, guys. I hope you guys enjoyed it. Pretty much the simple model, mechanical and repeatable, happens every single day. It's not going to work 100% of the time. You're going to get a loss or two here and there, but trading is a long-term gain. And if you can't stay consistent with a strategy and a model, you're not going to succeed. And that is simple and harsh truth. Okay, it's not like I have 100% win rate strategy. Okay, and let's be honest. Even if you're making 1% a month, you are better than 99% of the traders out there, because only 1% of the traders make out in this. Yeah, sure, they can get lucky. They can make like 7% in a day, but I promise you in a month or two, they're going to blow their account because, they're chasing big numbers. But anyways, that's going to be it. Hope you guys enjoyed. I'll see you guys in the next one. Take care. Goodbye.